Hi, we're here today at the 2019 IPEM edition. Very happy to be here, and I'm joined today by Meric, partner with LGT Capital Partners. Cem, hello.
Hi.
So we're here to talk a bit about fundraising. 2018 was a record year. Now everyone wondering whether that trend is set to continue or if there are big risks that could stop the momentum. What do you think?
Well, if you look at the private equity fundraising environment, it has been very, very good and strong over the last few years. It's hard to see a change because there are so many investors who are still behind their allocations, and also there are so many newcomers into the asset class, given the good returns that we had on the private equity overall in private equity. So, what may change that? Well, I mean, if returns were to go down, which may happen as we are at the late cycle and pricing went up.
But we don't know to what extent.
We don't know to which extent, but you know, I don't believe in kind of disastrous returns, so I don't see a significant demand change due to that. Well, what may be kind of a driver is a bigger problem if there's some sort of a sustained economic crisis. Then you know that could actually drive a denominator effect, leading to investors having less money to deploy.
To invest in GPs.
So that's the demand side, I think, of the equation. And if you think of the supply side of it, I mean, there is certainly a lot of capital that has been raised over the last few years, which means that
level of dry powder.
There's a lot of money to be put at work still. The good news is that there are also a lot of deals to be done. I mean, this environment unlocks a large amount of deals and convince sellers to sell. That said, if there is a slowdown, for example, due to public valuations becoming kind of cheaper for a sustained period of time, private equity players all of a sudden thinking, well, we may actually be overpaying and trying to basically bring down their kind of price levels, that would lead to a situation where probably there'll be less deals, disagreement on price, and that would imply that you know, the dry powder could last for longer.
And so slow down the fundraising machine more drastically.
Correct.
In that environment, what do you try to do at LGT? What kind of strategy are you willing to back? What kind of managers?
I mean, we say we want to go with our highest conviction managers, so we think this is not an environment where you need to back a lot of unproven emerging managers. That said, we do some of that, but one needs to be actually quite selective and careful. What we like seeing is managers who, at the face of this increasingly challenging private equity environment, a lot of money, competition, higher pricing levels, is higher levels of sophistication in everything that they do in their business. So that's what we are looking for. Managers investing into their own resources to improve really their game, be on the sourcing side, be on the value add side for post acquisitions, and that's what we have started seeing over the last 3, 4, 5 years. That you know, in kind of the smaller end and mid market, there is increasing sophistication, taking some of the best practices that they see at the larger end of the market.
So all in all, you remain positive on the environment and don't see any big threats.
Well, I mean, there are always threats in the environment, but I guess as long as there is money to be invested, and given the levels of distributions that we have experienced over the last few years, there's certainly a group of LPs who are still underallocated to private equity. You know, again, that may change, but I don't believe in a change because of people, you know, just being concerned about managers. It's, I think, more of a top-down risk at this stage.
Thank you very much, Meric, for having shared your views with us today.
Thank you.